In a modern world, Bitcoin stands out as a revolutionary asset, offering unprecedented global potential and is redefining the very nature of investments altogether. With a market capitalization that rivals major global companies, Bitcoin signifies a seismic shift in investment paradigms, presenting itself as a viable alternative. Hi, my name's Scott McLean, and I'm a financial advisor with BrightWealth. Our team fully believes in the crypto and Bitcoin space, and this video is our official case for Bitcoin. Now, nothing in this video should be considered financial advice. If you want financial advice, you need to talk one-on-one with your financial advisor and show them this video, or schedule an appointment with Bright Crypto team at BrightWealth, and there's a link in this video. But do not take anything from this video as financial advice or one-on-one advice for you specifically without talking to your advisor. Okay, this case for Bitcoin explores the reasons why Bitcoin is an attractive investment option, from its role as a hedge against inflation, a store against value, to its capped supply, which underpins its scarcity and potential for appreciation. Additionally, one must consider the unique qualities of Bitcoin, such as the predictable yet impactful halving events, the decentralized nature of Bitcoin, the high liquidity, and the potential for high returns, all of which are augmented by a growing institutional and sovereign interest. And don't underestimate the power of institutional and sovereign money moving into the Bitcoin space. We'll talk about that in this video. Additionally, Bitcoin's potential for low correlation to the traditional stock market and asset classes like bonds and stocks is an indispensable tool for portfolio diversification, further enhanced by its global accessibility and security offered by its transparent and immutable ledger. In a world where financial systems are evolving, Bitcoin presents a compelling case for inclusion in any forward-thinking investor's portfolio, offering a blend of growth potential, diversification, and a hedge against traditional market volatilities. In this video, we aim to make the case why, in an era of rapid technological and economic change, Bitcoin should be considered an essential component of a diversified investment portfolio. So let's get started, and why not start with the numbers? For market cap, as of December 2023, Bitcoin's market capitalization stands at approximately $814 billion and ranks 10th in the world's largest asset classes. Let's take a look at that. We have gold ranking number 1 at $13 trillion. You got Microsoft number 3, Saudi Aramco number 4. If you look right on down the line, we've got Meta sitting there at $856 billion, just above Bitcoin, which is currently ranked 10th at $823 billion, above Berkshire Hathaway, Tesla, Visa, United Health, JP Morgan Chase, Walmart, MasterCard, Exxon. All of those are smaller than Bitcoin. Market capitalization of Bitcoin is major. This positions Bitcoin not only as a significant player in the cryptocurrencies market, but also puts it in a league with some of the world's largest companies. To put this in perspective, you really have to think about how many dollars are put into Bitcoin right now. More money is invested in Bitcoin than is invested in Warren Buffett's company, Berkshire Hathaway. The scale of Bitcoin's market capitalization reflects its growing acceptance and legitimacy in the financial world, offering investors a unique combination of technology, security, and potential for growth. Bitcoin is also a hedge against inflation. Bitcoin is often viewed as a hedge against inflation because, unlike fiat currencies, all the major currencies of the world, Bitcoin has a capped supply, reducing its susceptibility to devaluation through excess supply, i.e. printing trillions of dollars. You can't print trillions of Bitcoin. Bitcoin only has 21 million coins total that can be minted, and they're not even all in circulation. And we'll talk a little bit more about that as we get going. So you have a supply that is fixed and can't be manipulated. The store of value. Bitcoin is an excellent store of value due to its global acceptance and increasing adoption, making it akin to digital gold. What happens is people that are in third world countries, second world countries, even first world countries like America, that feel that there is uncertainty forming in the marketplace, take money out of the banking system, out of real estate, out of gold and silver, and they can put it into Bitcoin. Now, Bitcoin can be transferred from one country to another country instantaneously. Have you ever tried to fly through the airport with $100,000 worth of gold or $1 million worth of gold? Or have you tried to transfer gold from one country to another? That's why Bitcoin is an excellent store of value. Okay, I talked about this earlier. Limited supply. Only 21 million Bitcoin will ever exist, period. Creating scarcity, which can drive demand and potential increase its value over time. To make things even better or worse, I guess, depending on how you want to look at it, not only does it have a limited supply, but that supply is currently being mined. The same way gold is mined in mines, gold mines, Bitcoin is being mined by miners all over the world. And we'll do a whole video on Bitcoin mining. But every 4 years, around every 4 years, there's a thing known as Bitcoin halving. And Bitcoin halving is where it takes twice the amount of energy to mine the same amount of Bitcoins. And every 4 years, they cut the amount of gold or the amount of Bitcoin that you can pull out of the ground by half, making it a more scarce asset, essentially, effectively reducing the rate at which new Bitcoins are created. This mechanism is integral to Bitcoin's original design and enhances its scarcity by slowing down the supply increase. In the short term, halvings can lead to price increases due to this reduced supply. Overall, Bitcoin mining halving events are pivotal in shaping Bitcoin's economic model, making it a unique investment opportunity compared to traditional asset classes. All right, another major reason why we're making a case for Bitcoin here at Bright Crypto is decentralization. Bitcoin operates on decentralized network, free from control of any single entity or government, providing a level of security and autonomy not found in traditional currencies like the US dollar or other world countries. We've all heard the stories of countries manipulating their currencies and devaluating them all the way down to zero. Just think of Venezuela, Zimbabwe, and many others. High liquidity is another reason why we believe Bitcoin should be in many people's portfolios. Again, not saying it should be in your portfolio. You need to talk to your advisor for that. But high liquidity is one of the reasons why it should be, generally speaking, in portfolios. Bitcoin is highly liquid, with numerous exchanges and platforms facilitating easy trading and the conversion into other assets or fiat currencies on the fly. There are lots of exchanges around the world. You can transfer Bitcoin from America to Europe in 12 seconds or more, maybe a couple minutes. You can transfer it anywhere, to anywhere, from anywhere in the world immediately without having to go through the traditional banking system. Another reason why we're making the case for Bitcoin is its potential for high returns. Historically, since the beginning of time, Bitcoin has returned closer to 80% a year on average. However, it's highly volatile, so it goes up and it goes down. Bitcoin has shown that its potential for high returns is appealing to investors who are willing to tolerate the higher risk or the higher volatility. And if you can tolerate that and stand the test of time, Bitcoin has historically shown higher returns. Here's a major reason why we're making a case for Bitcoin. It has matured to a point now where there are increasing institutional interests. Growing interest from investment and institutional investors lend to the credibility of Bitcoin, suggesting that it is maturing in the market and growing wider market acceptance. Right now, I believe that there are 10 or 11 or 12 companies, let's take a look exactly, that have applied for institutional access to Bitcoin, meaning that you could buy Bitcoin through your retirement account. And we have companies such as, let's take a look at this, the top 10 companies that are currently applying for Bitcoin ETFs are BlackRock. BlackRock currently has $8.5 trillion under management. I've heard numbers saying that if 10% of the people that have money invested with BlackRock, 10% of those people took 1% of their portfolio and put that into Bitcoin, that it would drive the price of Bitcoin up above 100,000 and go even further. Fidelity is applying for a Bitcoin ETF. They currently manage over $4 trillion. Franklin Templeton manages over $1.4 trillion, has applied to the SEC for a Bitcoin ETF. Altogether, there are over 10 companies that have applied for Bitcoin ETFs, and many of them, possibly a lot of them, will be approved as early as January of 2024. Guys, this is major news. If trillions of dollars can flow into the Bitcoin space with a limited supply, what is that going to do to the price of the currency, to the price of that coin? I'll let you run your own analysis on that, but we here at Bright Crypto think that the only thing that it's going to do to Bitcoin is drive the price up. Okay. Technological innovation is another reason why you want to add Bitcoin to your portfolio. Bitcoin represents a major technological innovation in financial systems, and its pioneering approach to money and payment systems, allowing transactions to occur, like I mentioned earlier, simultaneously, globally, worldwide, without having to go through the traditional banking system. Okay. Portfolio diversification is another reason why we think that you should add Bitcoin to a standard portfolio. Not you specifically, but generally speaking. Again, you need to talk to your own advisor if you want it in your portfolio. Bitcoin's low correlation with the traditional asset classes like stocks and bonds make it a tool, a useful tool for portfolio diversification. Now, sometimes when the markets are running, so is Bitcoin. But there have been times when the markets have been falling that Bitcoin decouples and rises on its own. And when bad news comes out, like the banking system collapsing in the US or banks closing down, initially that might pull the price of Bitcoin down, but then it also has had the effect of pushing the price up, decoupling it or creating an uncorrelated relationship to the stock market. That is major for having a hedge against the traditional stock market in your portfolio. Global accessibility is another reason why Bitcoin should be part of a well-rounded portfolio. Bitcoin can be accessed and used globally without the need for traditional banking systems, like I mentioned earlier, making it appealing for international transactions and users without access to traditional banking. I heard recently that Venezuela now accepts Bitcoin in their airport, and they're making Bitcoin part of their national currency. Another reason why Bitcoin should be part of a well-rounded portfolio is its transparent and immutable ledger. Bitcoin's blockchain technology ensures transparent and immutable transaction records, meaning that anyone can look in anywhere and see it, and it cannot be broken. It enhances the security and the trust in the overall system, and it's one of the reasons why the establishment doesn't like it. And finally, the community and ecosystem growth. If you haven't known it, those that are Bitcoiners, there's an ecosystem, there's a belief in it, there's an understanding, a knowing, and there's a growing community and a growing ecosystem globally of individuals, including developers and startups, and those continuously contributing to its innovation and its particular applications. In conclusion, the case for Bitcoin illustrates Bitcoin's significant role in evolving financial ecosystem, making it an essential asset in the portfolios of contemporary investors. The convergence of its attributes, ranging from the assurance of scarcity through its capped supply, through its predictability and impact of halving events, to its decentralized nature, all of these positions Bitcoin as a unique investment vehicle that potentially should be included in your portfolio. In our opinion, in my opinion personally, Bitcoin stands out not merely as an alternative asset class, but a necessary addition to a well-rounded investment strategy. So that's our official case for Bitcoin here at Bright Crypto. Again, my name is Scott McLean. I am a financial advisor, and with Bright Advisor and the Bright Crypto team, nothing on this video is financial advice for you one-on-one. If you do want financial advice, I want to encourage you to follow the link in this video and schedule a planning session with the Bright Advisor team and the Bright Crypto team specifically, or share this video with your financial advisor and meet with them one-on-one before making any decisions. Be sure to like and subscribe our YouTube channel if you found value in this video, and we'll see you on the other side. My name's Scott McLean. It's not what you make, it's what you do with what you make.